All right, guys, we started off with good morning, guys. Komal. Yeah, so we started off with advanced capital budgeting decisions. But the other day, I told you that there are three important factors. One is the impact of inflation, the other one is the impact of changes in technology, and the other one is impact of change in government policy. These three are the factors that are going to affect your capital budgeting decisions. Uske baad mein, beta, we spoke about how can we incorporate risk. Under incorporation of risk, beta, we started off with statistical techniques. Under statistical techniques as such, guys, we learned how to compute standard deviation, variance, coefficient of variation. Okay? If you have to compute standard deviation of the NPV of a project, guys, you can compute NPV at different possibilities, take standard deviation of those NPVs. Or else, if cash flow of multiple years are given and they are independent, क्या करना है? Hillard's model that we have learned. If they are independent cash flows, beta, you will take variance of first year cash flow by 1 plus r whole square, variance of second year cash flow by 1 plus r whole power 4, variance of third year cash flow, so on. याद है नहीं है? If the cash flows are dependent, guys, the last concept that we did yesterday, instead of squaring, guys, you will directly write standard deviation of first year cash flow by 1 plus r, standard deviation of second year cash flow by 1 plus r whole square, standard deviation of third year cash flow by 1 plus r whole cube, so on. By doing this, beta, you are not arriving at variance of portfolio, you're directly, variance of NPV, you're directly arriving at standard deviation. Alright, beta. There were two homework questions given, guys. Question number 4 and 8. Fourth one, mein, beta, your objective is to compute coefficient of variation. Kare, beta? Question number 4, guys. Objective is to compute coefficient of variation. Can you tell me what is the expected cash flow of project A? 14. Question number 4, beta. Homework question. Project A, project B, guys. Expected cash flow of project A, beta, is 14,000. Cash project B, guys, 18,000. Standard deviation, guys. Project A. Without that, you will not be able to compute coefficient of variation. 2190.89. Second project, beta, 4195.24. Everyone got the same answers. After this, you will compute coefficient of variation. To compute coefficient of variation, but I'll write standard deviation divided by mean. How much is that? 1565 233.2331. So that's 0.1565, guys, and this 0.2331. This will be your coefficient of variation. So next, beta, what was the other homework question? 8th one. उसमें doubt है देखो. These are the answers to question number 4, beta. Normal question, the expected cash flow standard deviation करके आया ना. 8th one, guys, it's given as expected NPV is given, standard deviation is given. Which project will you recommend based on the above data? Explain whether your opinion will change if you use coefficient of variation as a measure of risk. Guys, because second bit mein beta they've asked us whether your opinion will change if you use coefficient of variation. The answer to the first bit as such, guys, should not be based on coefficient of variation. Are we clear, guys? So in the first bit as such, beta, you can directly compare the risk element as such, guys. You can write both the decisions, guys, NPV as well as risk. Based on NPV as such, beta, which project will be selected? Y. But if you want to take a lower risk as such, guys, then project X. This is based on NPV and standard deviation standalone. But if you use कुछ compute करने का है नहीं बेटा, वहाँ पे direct conclusions लिखना है. All the calculations are already there. लिखो बेटा first bit का answer अगर नहीं लिखे तो. Question number 8, beta, first bit. समझ में आया ना? Why are we computing it only on the basis of standard deviation first bit? क्योंकि second bit में is asking us separately to compute coefficient of variation. अगर वो नहीं देता तो first bit directly would be based on coefficient of variation. Right on first bit, guys. If decision is taken only on the basis of NPV, project project Y should be selected. Project Y should be selected. Project Y should be selected. And if decision is taken only on the basis of risk, if decision is taken only on the basis of risk, if decision is taken only on the basis of risk, project X with lower standard deviation should be selected. Project X with lower standard deviation should be selected. Project X with lower standard deviation should be selected. Second bit beta, coefficient of variation किसका कम है guys? Second bit beta, coefficient of variation. X का कितना है बेटा? 90,000 by 1,22,000, 0.7 7377. Y beta 5333. So which one will you select guys? Y. Y should be selected beta because it has a lower relative risk. Y should be selected as it has a lower relative risk. ये पीछे का वो एसी ऑन कर देना, यहीं से पास करके थोड़ी देर में बंद कर देंगे. हाँ हाँ अबे दबा बस. Project Y should be selected beta with a lower relative risk. Which measure is more appropriate in this situation and why? Undoubtedly guys, it is coefficient of variation. Absolute NPVs as such guys should not be considered as such beta. We should compare the risk incorporated guys along with the return. Is that clear? Likho beta third bit. Standard deviation is an absolute measure of risk. Standard deviation is an absolute measure of risk. Standard deviation is an absolute measure of risk. And hence we cannot compare standard deviation of multiple projects. We cannot compare standard deviation of multiple projects. We cannot compare standard deviation of multiple projects. We should take decision on the basis of coefficient of variation. Coefficient of variation. We should take decision on the basis of coefficient of variation. ठीक है? Question number 9 guys. Regular concept, कुछ नया नहीं है. KLM Limited is considering taking up one of the two projects. शुरू करूँ पढ़ना? Project K and Project S. Both the projects have same life, require equal investment of 80 lakhs each. Both are estimated to have almost the same yield. As the company is new to this type of business, the cash flow arising from the projects cannot be estimated with certainty. An attempt was therefore made to use probability to analyze the pattern of cash flows from other projects during the first year of operations. The pattern is likely to continue during the life of these projects. The results of the analysis are as follows. क्योंकि बेटा सेम कैश फ्लो हर साल आने वाला है, project life is not given. Whatever they're asking us to compute as such guys will be in terms of cash flow only. They cannot ask us to compute NPV guys because initial investment and life is not given. Plus standard deviation guys here would be standard deviation of cash flows. समझ में आ रहा है? वो लिख लो बेटा पहले बस. Life of the project and discounting rate is not given. Life of the project and discounting rate is not given. Life of the project and discounting rate is not given. Discounting rate is not given. Hence, NPV cannot be computed. Hence, NPV cannot be computed. NPV cannot be computed. Standard deviation here would mean standard deviation of cash flows. Standard deviation here would mean standard deviation of cash flows. Standard deviation of cash flows. शुरू करें? चलो guys, compute guys. Standard deviation, coefficient of variance. That is variation beta and variance. Guys, the first wala minus 11 mat lo guys. I think that's a mistake. First cash flow do not, huh? 11 है बेटा मेरे यहाँ पे भी. Oh my god, ये notebook में minus है बेटा. That must be the printing. Huh. Yes guys. 11, 13, 15, 17, 19. These are the cash flows in lakhs. We have probabilities given better here. 0.1, 0.2, 0.4, 0.2, 0.1. Expected cash flow beta after this. X bar beta 3.4, 2.6, 6, 6, 12, 13.9, 15. You will then compute xi minus x bar into pi. 11 minus 15 is 16 into 0.1, 1.6. 4 multiplied by 0.2, 0.8. 0. 4 into 0.2 is 0.8. 16 square into 0.1 is 1.6. 2.4, 2.4, 4.8. Variance is equal to 4.8. Standard deviation beta will be root over 4.8. कोई क्या standard deviation? 2.19. Remember this is in lakhs beta. Variance was lakh square but this is lakhs. Coefficient of variation guys. Standard deviation divided by mean. How much is your mean guys? 15. 2.1909 divided by 15 beta. 14606. Once you do this beta, project S beta. Yes guys, वरुण हो गया सेकंड वाला भी. Project S guys, what is the expected cash flow that you got? थर्टीन मतलब 3.25, 17 मतलब 5.1, 21 मतलब 5.25, 10, 13.85, 16.85, 16.9, 17.1, 18. हाँ, 10, 12, 12.85, 15. हाँ, xi minus x bar whole square into pi guys. करने दे, दिमाग खराब हो जाएगा पूरा वरना. 6.4 guys. 4 square है 7 बेटा है 16, 16 into 0.25 is 4, 17 minus 17 whole square into 0.3 बेटा है शून्य, 21 minus 17 whole square, 16 into 0.25 is 4 again beta, 25 minus 17 is 8, 8 whole square guys multiplied by 0.1 is 6.4 again guys. So this will be 6, 6, 12.8 and 8, 20.8. This is your variance guys. Standard deviation beta will be root over 20.8. How much is that beta? 4.5607. Coefficient lakhs. बार बार भूल जाता हूँ यार. Coefficient of variation guys. Compulsory standard deviation को unit of measurement लिखना है बेटा. You cannot leave it like that. Coefficient of variation beta standard deviation by mean 4.5607 divided by 17. 2683. 0.2683 beta is your coefficient of variation. Standard deviation beta is 4.5607. Are we all clear about this guys? Which of the two projects is more riskier beta? Will you take a decision based on दोनों बेटा? If you look at both relative measure of risk and absolute measure of risk, both of them are less for project K. Whenever they say which of the two projects is riskier as such guys, decision should be based on coefficient of variation, not based on standard deviation. You should always compare relative measure of risk and not absolute measure of risk. Are we clear guys? ये हो गया पूरा computation. So answer to the second bit beta, what will you write? Project S is more riskier as the coefficient of variation is higher. Project S is more riskier as the coefficient of variation is higher. Project S is more riskier as the coefficient of variation is higher. Done guys. Question number 10 beta. Question number 10 guys. Project X and Y are under the evaluation of XY company. The estimated cash flows and their probabilities are as below. Project X beta investment year 0 is 70 lakhs. Probabilities weights beta year 1 to 3. Probabilities of 0.3, 0.4 and 0.3. The cash flows are given beta for all the 3 years. Year 1, year 2, year 3 guys, 30, 30, 30, 50, 40, 40, 65, 55, 45. Project Y beta investments are given 80 lakhs. Annual cash flows through life guys, rupees and lakhs are given, point 0.2, point 0.5, point 0.3, 40, 45 and 50. Which project is based on NPV criteria with a discount rate of 10%? You're supposed to arrive at NPV of both the projects, but three different scenarios are given as such guys. दोनों का life of the project is how much beta? 3 years as such guys. Second project का भी beta life will be considered as 3 years only, though it is not given. समझ में आ रहा है guys? So you're supposed to arrive at NPV. After that beta they're asking us to compute standard deviation of the present value distribution and analyze the inherent risk of the projects. Now guys, pay attention guys, most important point. What do you think is cash flows are dependent or independent? हाँ, प्रोजेक्ट एक्स इंडिपेंडेंट है क्योंकि वो मल्टीपल सिनारियोज दिया हुआ है कि कुछ भी हो सकता है. प्रोजेक्ट वाई डिपेंडेंट. हाँ, this question is coming right from 2000 as such guys. They assume both the projects to be independent. So when you say annual cash flows through life as such guys, ये रहेंगे मतलब every year as such guys cash flows can be any of these three. Instead of ऐसे सोचो बेटा, instead of giving you three columns 40, 45, 50, 40, 45, 50, year 1, year 2, year 3, they give like this. So if they give you like this, then you would have, this would have been similar to the previous question. Then you would have taken the probabilities to be independent. समझ में आ रहा है guys? Yes or no? कल का जो मैं कराया था बेटा good normal was different. That was to tell you how to arrive at probability NPV. वहाँ पे पूछा भी नहीं वो, and तुम्हारे को आएगा भी नहीं. I told you that dependent is only for our understanding as such beta. Unless they mention specifically in the question, you're not going to take that. Probabilities are always going to be independent. तो यहाँ पे guys, both the projects are supposed to consider cash flow distribution to be independent. If cash flow distribution is independent as such guys, arrive at the Hiller's model. Use Hiller's model and arrive at standard deviation of the project. Question is clear. They're asking us to compute standard deviation of NPV. Present value distribution matlab NPV. Is that clear guys? लिखो बेटा. एक note लिखना guys and then though it is not specified, though it is not specified, though it is not specified, not specified. Cash flows are assumed to be independent. Cash flows are assumed to be independent of preceding year cash flows. Cash flows are assumed to be independent of the preceding year cash flows. Cash flows are assumed to be independent of the preceding year cash flows. Cash flows are assumed to be independent of the preceding year cash flows. Independent preceding year cash flows. ठीक है बेटा? Start guys. You know what is to be done, right? अगर तुम्हारे को स्टैंडर्ड डिविएशन चाहिए मतलब क्या करना है बेटा? एवरी ईयर कैश फ्लो का यू नीड स्टैंडर्ड डिविएशन. Every year cash flow ka you will need standard deviation. Without that you will not get standard deviation of the entire project. याद है नहीं है Hiller's model में बेटा? You need year 1 का variance, year 2 variance, year 3 variance. So instead of directly computing NPV at this stage, what will you do beta? Take these cash flows, arrive at expected cash flow and standard deviation. Take these cash flows, arrive at expected cash flow and standard deviation. Take these cash flows, arrive at expected cash flow and standard deviation. Once we get expected cash flow for all the 3 years as such guys, we can arrive at NPV and portfolio, overall standard deviation. समझ में आ रहा है? You can mark the question guys so that you revise it later. तुम्हारी शक्लों से confusion दिख रहा है. It is only because the information is not given in the format that you are used to guys. बाकी पूरे questions में year ऊपर देता था, अभी year बाजू में दिया तो तुम लोग confuse हो रहे हो. नहीं नहीं बेटा, हाँ चलता. In the exam they will specify. अगर नहीं, they will give you discounting factors. नहीं दे रहा है, always stick to 4 decimal points. अगर टेबल में तू लिखेगा ना, once you write discounting factors in the table, you're supposed to use the same discounting factors. यहाँ पे अपन लिख रहे ही नहीं, इसीलिए तो एग्जाम में ऐसे क्वेश्चन में do not have to prepare a table only. Directly write divided by 1 plus r 1. हाँ, perfect कर सकते. That is also the suggested answer in most of the cases. Do revise the question later, beta. Mark it. Question number 10, guys. Year 1, beta, cash flow can be 30 lakhs, 50 lakhs and 65 lakhs. Probability 0.3, 0.4, 0.3. How will I compute expected cash flow? X bar, beta, will be summation xi pi. So 30 into 0.3 is 9, 50 into 0.4 is 20, 65 into 0.3 is 19.5, guys. 29 and 19.5, 48.5. Then you will compute xi minus x bar whole square into pi. 30 minus 48.5 whole square into 0.3. This is to arrive at variance of first year cash flow. Without this, we will not be able to arrive at standard deviation of the entire project. Do this, guys. Yes, beta. कितना है, guys, year 1 का variance? Yes, guys, year 2, beta. ये कितना बोले थे बेटा तुम लोग वेरिएंस ऑफ ईयर 1? 185 पॉइंट. ईयर 2 का सिमिलर कैलकुलेशन बेटा. हो गया तुम्हारा तीनों साल का 30, 40 एंड 55. Probability is 0.3, 0.4 and 0.3, guys. Expected cash flow beta x bar is equal to 9 16 and 16.5 beta 32 plus 9 41.5. You will now compute guys summation xi minus x bar whole square into pi. हो गया ये भी. What will you write guys? कितना है बेटा टोटल? बहुत बच्चे आ गए. 90 95.25 guys. This is for year 2 beta variance. Because type in the year 2. Year 3 guys, cash flows are how much beta? 30, 40 and 45. Probability beta is 0.3, 0.4, 0.3. Expected cash flow guys. X bar is equal to summation pi xi guys. 30. अरे भाई बाद में clean कर. 13.5, 38.5. Variance guys is xi minus x bar whole square into pi guys. 30 minus 38.5 whole square guys into 0.3. 40 minus 38.5 whole square guys into 0.4. 45 minus 38.5 whole square guys into 0.3. How much is this better? 35.25. Please check guys, you will get variance as 35.25. You know the discounting rate guys. Can you now compute NPV beta? Present value of cash inflows beta. First year का expected cash flow कितना था? 48.5. That divided by 1.1. Second year का expected cash flow beta was 41.5 divided by 1.1 whole square. 38.5 divided by 1.1 whole cube. This will be the present value of cash inflows. 37314. What is the amount of initial investment that you have made beta? 70 lakhs. Therefore NPV beta will be 37.314 lakhs. NPV guys is 37.314 lakhs. Are we clear about this? Standard deviation guys कैसे करोगे बेटा? Hiller's model याद है ना? Variance कैसे लिखोगे बेटा? Will you compute variance of NPV or standard deviation of NPV? Variance compute करके ही you can arrive at standard deviation. Variance of first year divided by 1 plus r whole square. Variance of second year by 1 plus r whole power 4. Variance of third year divided by 1 plus r whole power 6. How much is variance of first year beta? 185.25 by 1.1 whole square. Second year 85.95.25. Third year 35.25. All of this beta will give us variance of the NPV distribution guys. Once we get variance, you can take the root of that and arrive at standard deviation. समझ में आया बेटा ये? Did you all get the NPV guys? ये कितना है बेटा अभी? Standard deviation 15 point. This calculation you will now have to do beta for project Y. Best part beta project Y का guys, you have to do it only for 1 year. That will remain same for all the 3 years. हो गया गुरदीप? Standard deviation भी आ गया. कितना आया? 185.25 आया. Variance कर रही है. कर बेटा जल्दी. Online students, if you're done with the second project, beta, let me know. Guys, do not forget, beta, what is the implied assumption here? That the life of the project is 3 years. Yes, beta. Alright, guys, I'm assuming that you're all done with project Y. Nitali, आ गया आंसर. कितना है स्टैंडर्ड डेविएशन? Year 1 का कैश फ्लो बेटा कैन बी 40, 45, 50. Probability बेटा is 0.2, 0.5, 0.3. Expected cash flow कितना expected cash flow? 45.5 guys. Variance बेटा xi minus x bar whole square into pi. Total बोल दे डायरेक्ट 12 सिर्फ 12.25. 12.25 guys. Now guys, expected cash flow of year 1 will be equal to cash flow of year 2 will be equal to cash flow of year 3. That is 45.5. Variance of year 1 will be equal to variance of year 2 will be equal to variance of year 3, which is 12.25. You do not have to recompute guys every year. What will be your present value of cash inflows better? I can write 45.5 guys divided by 1.1 plus or multiplied by present value annuity factor guys for 3 years. कितना आ जाएगा बेटा present value of cash inflows? 113.152. Investment कितना है बेटा 80, 70, no 80. 70 previous project beta and 80 this project. Oh, 33.152 guys is the amount of your NPV. Are we clear about this? What will be the variance of NPV better? Guys, once you get expected cash flow of 1 year, remember the expected cash flow of every year will be the same. There's no change. Now variance with the first year divided by 1 plus R whole square, variance of second year and third year. Write the same amount beta, 12.25. 12.25 divided by 1.1 whole power 6, guys. What's the answer beta? 25 point lakh square. So standard deviation of NPV beta will be equal to root over 25.4056 beta 5.0404. Based on NPV as such, guys, which project are you going to select? First bit बोल रहा है बेटा, which project is better on NPV? Which project has a higher NPV beta? Project X has a higher NPV. Which project has a lower risk as such, guys? Project Y as such beta. Second bit में you will directly write the answer based on standard deviation only as specified in the question. Everyone got this beta? Any doubt in this, guys? Need to write the conclusions, guys. First bit का answer क्या है बेटा? Based on NPV, which project will be selected? Project X will be selected. Based on standard deviation, guys, which project is less riskier? Y is less riskier. Based on standard deviation, beta Y is less riskier. Last question, guys, of probability. Question number 11. Then we'll start off RADR and certainty equivalent. अच्छा है झुमका तेरा झुमका अच्छा है. Yes, guys, are you all done with it? Question 11 बेटा हो गया, वो भी हो गया. हो गया 11th वाला. कितनों का हो गया 11th वाला? तुम दोनों का ही टाइम पास करो. किसमें आगे? नहीं, 2 चैप्टर प्योर थियोरी है, स्टार्टअप एंड सिक्योरिटाइजेशन. रिस्क मैनेजमेंट थियोरी प्लस प्रैक्टिकल है. अच्छा है, अच्छा मतलब प्रैक्टिकल कॉन्सेप्ट बहुत यूज होता है. सो बेस्ड ऑन नॉर्मल डिस्ट्रीब्यूशन. म्यूचुअल फंड्स इज प्योर प्रैक्टिकल. International financial management, interest rate risk management is also pure practical. Security analysis is theory. Security analysis में how to analyze security सीखते तुम लोग. वारुण हो गया? 11th वाला भी हो गया? ब्रेक लिया 1 मिनट का, आराम से, कोई जल्दी नहीं है. कहाँ जाना है अपन को? सब मोमा है वैसे भी. Yes, guys. Shall we start the 11th one? Shivam Limited is considering two mutually exclusive projects A and B. Project A will cost 36,000 while B will cost 30,000. You've been given the following NPV probability distribution for each project. They've already computed NPVs and given us. We're supposed to arrive at the expected NPV. When individual NPVs are given, beta, how will you arrive at expected NPV? Multiply all the NPVs with the corresponding probabilities. That will give us the expected NPV. Correct, guys? And then beta compute the risk attached to the project, that is standard deviation. एक ही table में beta you will first finish off expected NPV and the corresponding standard deviation. Profitability index you will do, guys. पहले तुम लोग ये खत्म कर दो बेटा. Profitability index is nothing but PVCI divided by PVCO. You know NPV, you know initial investment. You can arrive at PVCI. Start beta. Similar calculation beta, quickly start. फटाफट खत्म करो बेटा. Yes, beta. Did we all get the answers? Project 1, guys, what is the standard deviation that you got? सबका हो गया बेटा? Ruby, are you done with both the projects? प्रेरणा दोनों प्रोजेक्ट्स हो गए? सेकेंड हो रहा है. 6,600, 2,400, 9,000. Can you tell me beta what is the variance of the first project? हाँ कितना? 198 lakhs. Not lakh square, no. 198 lakhs only. Correct? So guys, your standard deviation beta will be root over this beta. How much is that? 2,000? 4,000? 449. 4,450 approximately, guys. 4,449.7 is the standard deviation of project A, guys. Everyone got this answer? First project ka beta expected NPV is 9,000, guys. Standard deviation is 4,449.7. Next beta project B, guys. What are the answers? I'm directly writing beta expected NPV कितना है? हाँ NPV expected NPV. Variance beta is 1 crore 44 lakhs beta. So standard deviation beta would be 3794.73, guys. This will be the standard deviation. We've computed both variance as well as standard deviation beta. सबको आ गया बेटा project A and project B. Third bit, guys, how will you compute profitability index? Profitability index is such, guys, is PVCI divided by PVCO. We all know, guys, that NPV is equal to what? PVCI minus PVCO. So can I write PVCI beta as NPV plus PVCO? Whatever is your PVCO, to that if you add NPV, guys, you will get your PVCO. So this beta. So if you add PVCO and NPV, you will get PVCI. So project A ka, guys, what is your NPV beta? 9,000. Initial investment 36,000 divided by 36. So 45,000 by 36,000. 1.25. Project B, guys, it is 9,000 plus 3,000, 30,000 divided by 30,000. 1.3. This will be the profitability index, guys, of project A and project B. They gave us NPV, they gave us PVCO, guys, using which we can arrive at PVCI. Done with this? क्या डाउट है? Which project will you recommend, guys? State with reasons. In terms of every factor as such, guys, project B is better. If you look at the initial investment beta, it is less. Expected NPV is same. Standard deviation is less. Your profitability index is higher. All of you finish off this profitability index part better. Are we all done, guys? Conclusion लिखो guys. Sagran हो गया बेटा यहाँ तक? Write the conclusion, guys. Project B should be selected as it requires a lower investment. Project B should be selected as it requires a lower investment. Project B should be selected as it requires a lower investment. Requires a lower investment. Has the same NPV as A. Has the same NPV as A. Has the same NPV as A. And has a lower standard deviation. Has a lower standard deviation, that is risk. Lower standard deviation, which is risk. Are we clear, guys? समझ में आ गया बेटा ये? Guys, the next concept is साथ बेटा is RADR, conventional techniques beta, RADR and your certainty equivalent approach. Concept book, guys. The next set of things beta is conventional techniques. Conventional techniques beta. We have two conventional techniques, guys. One is risk adjusted discount rate. The other one beta is RADR. Sorry, certainty equivalent approach. When we say risk adjusted discounting rate, guys, what do you understand by this? Whatever is the discounting rate that you're using as such beta to evaluate a specific project, that should be inclusive of the risk that is involved in the project. You should incorporate risk in the project discounting rate. This is what we do under CAPM also. When you write RF plus beta into RM minus RF as such, guys, it will become your discount. Matlab you're incorporating risk premium and that should become your discounting rate. More specifically, guys, यहाँ पे what you have to understand, it is not just the cost of capital of the company that is important, but it is the risk of the new project that you're taking up. There might be scenarios as such beta where the existing cost of capital of an organization is lower. Why is it lower? Because the existing risk of the projects is lower. But what if you're taking up a very risky project? Will you still discount at the same cost of capital that is applicable? No, you will have to obviously take a higher risk. Okay? So that is the concept of risk adjusted discounting rate, guys. Take the entire cash flow as such beta and directly discount them at risk adjusted discount rate. इसका drawback क्या बोलते हैं बेटा? Drawback is that it might be difficult to determine the amount of risk premium exactly. But that's the drawback, guys, in every capital budgeting decision. How will you assess the exact amount of risk is always subjective as such, guys. It is not objective. So difficult to determine risk premium, and then better we are not stating standard deviation is the other risk factor here. Matlab disadvantage. That you will not be calculating standard deviation, you're only arriving at one single NPV and stating that NPV. Alright. Certainty equivalent approach beta on the other side is slightly different. Certainty equivalent approach is such beta is removing the risk element from the cash flow, guys, and considering only certain cash flows that are going to arise. Because you're removing risk element from the cash flows as such, guys, you will be discounting these cash flows at risk free rate. How do we remove risk is something which is very subjective. Again, that's the biggest drawback of certainty equivalent approach. But then, guys, it is based on the game of KBC better. KBC मतलब US का game as such better, but then उसका copy it is KBC. But हाँ, say you are at some level as such, guys. If you answer the question right as such, guys, say you are going, I do not know the levels as such, guys, but then say you win 1 crore as such better. If you do not answer that properly as such better, say you go back to the level of 13,60,000. All right, guys. And if you quit at this stage as such, guys, say you get 50 lakh beta, ठीक है, final, guys. Say you get an amount of 50 lakh rupees if you quit, if you do not want to answer the question as such, guys. How do they compute certainty equivalent factor as such, guys? Say what is the probability of this beta? Say the probability of you answering right is, say, guys, 0.8 and the probability 0.7, and say this is 0.3, guys. So what is your expected cash flow beta normally? If I use the concept of RADR, won't I multiply cash flow with the probability and take expected cash flow? कितना है बेटा? 70 lakhs plus 74.08 lakhs. So this is my expected cash flow. If I normally discount my cash flows as such, guys, at my risk adjusted discounting rate, I will take a cash flow of 74.08. यहाँ पे, guys, we will write 50 lakhs divided by 74.08. This becomes your CE factor, certainty equivalent factor. जो तुम्हारे को CA intermediate में, if you remember, guys, certainty equivalent factors used to be given. So 50 lakhs divided by 74.08 lakhs कितना है? 0.6749. So they will give you a cash flow of 74.08 and they will tell you that the certainty equivalent factor is 0.6749. Multiplying these two beta, you will get your certain cash flow, that is 50 lakhs. So instead of discounting 74.808 lakhs, I will discount. I know that I have an option of exiting, guys, and taking a cash flow of 50 lakh rupees. That is certain to arise. These cash flows will be at discounted beta at risk free rate. समझ में आया? That is the approach of certainty equivalent. दोनों का difference समझ में आया? Under RADR, you will take expected cash flow of each year and discount that at risk adjusted rate. अब ये risk adjusted rate के लिए बेटा एग्जाम में क्या करेगा? He will ask you to compute standard deviation. Based on standard deviation or variance, he will give you what is the risk premium to be considered. But so instead of directly telling you that this is a risk premium beta and directly discounted this, what is the fun in that? बोल he will ask you to compute something else. हाँ, range देता बेटा that ये range में इतना लेना है बोल के. Next, certainty equivalent का advantage क्या रहेगा, guys? Disadvantage as such beta is this. It is very difficult to compute, guys. What is the amount of certain cash flow that you can walk away with as such, guys, every year? Matlab, if you do not want to take risk as such, guys, and what is the amount of cash flow that is to be generated every year, that itself is difficult to compute beta. The biggest advantage of certainty equivalent beta is that we can have different levels of risk every year. I do not have to assume that the risk is constant for the entire project, unlike risk adjusted discounting rate. Risk adjusted discounting rate में बेटा we take an average risk for the entire project. Under certainty equivalent, I have the advantage as such, guys, of considering varying level of risk every year. First year में certainty equivalent factor can be very high. Second year it can be very. Usually beta you'll see that certainty equivalent factors keep reducing with the project life. Why? The nearest future beta you will be able to predict or estimate with a greater degree of certainty. But say if I talk about 10 years later as such, guys, the certainty will reduce. So I have that advantage here. समझ में आ रहा है नहीं आ रहा है? So what is superior, guys? Risk adjusted discounting rate or certainty equivalent? As per this, yes बेटा, certainty equivalent. ये सब किस में पूछ सकता है बेटा? MCQs और analysis. These main points will be important. समझ में आ रहा है नहीं आ रहा है? लिखो बेटा. RADR and RADR पहले. Right on. Under RADR, risk should be in. वहां पे कोई भी नहीं बैठे सर. Under RADR, आदमी भी अजीब प्राणी है बेटा। जब अकेला बैठता है मास्क लेके बैठता है, जब आके लोगों से नजदीक बात करता है तब मास्क निकाल के बात करता है। तो अकेला नहीं है बेटा, नॉर्मल टेंडेंसी है ये। अंडर RADR, the risk of a project should be incorporated. Risk of a project should be incorporated. Risk of a project should be incorporated. Incorporated in the discounting rate. Risk of a project should be incorporated in the discounting rate. In the discounting rate. Higher the risk, higher should be the discounting rate. Higher the risk, higher should be the discounting rate. Higher should be the discounting rate. Higher should be the discounting rate. Risk premium should be dependent on. Risk premium should be dependent on. Risk premium should be dependent on. Dependent on the risk of the project to be taken up. Risk premium should be dependent on the risk of the project to be taken up. Risk of the project to be taken up. अरे क्या नोट्स है यार. Risk of the project to be taken up. न्यूज बांधते बड़ा बेटा. Yes guys. समझ में आ रहा है बेटा? Next guys, what is the limitation के साथ बेटा? What is the disadvantage? ना नहीं तो वो बाद में लिखेंगे, दोनों के कंपैरिजन में. Certainty equivalent लिखो अभी. Certainty equivalent approach. Certainty equivalent approach. Certainty equivalent approach. Right on. Under this, risk is eliminated. Under this, risk is eliminated. Risk is eliminated. Risk is eliminated. ये देखो स्टूडेंट्स ग्रुप में ही आ गया, शुरू हो गया. As group 1 exams are completed, okay, yeah, in the SFM question of forward cancellation, the date 20th June was used. ICI did not bother to revise the date. So if you think the same, you should take a minute and write an email to ICI so that grace marks will be added. Yes, huh? Exactly. Students को चाहिए बेटा, कुछ तो चाहिए ना, मतलब नया पार करने के लिए. Anyways बेटा, risk is, under this approach, risk is eliminated from the cash flows. Risk is eliminated from the cash flow. Risk is eliminated from the cash flow. Guys, जितने ग्रेस मार्क्स ICI देता है ना, उतने कोई नहीं देता है, याद रखना. तुम्हारे को अगर कभी लग रहा है ना कि ICI डज नॉट गिव ग्रेस मार्क्स, तुम्हारे आंसर कॉपीज मंगाओ बेटा, एक बार देखो. वहाँ पे मार्क्स 45, 46 रहते हैं और अपने आंसर शीट में 55, 56 रहते हैं. सो ब्लडी कॉमन. आई हैव सीन सो मेनी, मतलब till date if I have seen say 1000 answer sheets of students, it might have happened that out of 1000, 10 or 20 did not have grace marks. That is the extent to which grace marks are given. So yeah, we do not have a right to say that grace marks are not given. 2022 costing paper was difficult बेटा, slightly. CA Inter कितने ग्रेस मार्क्स थे मालूम है बेटा तुम्हारे को? 8 मार्क, 9 मार्क, 10 मार्क, रैंडमली. बच्चों को जिनको 75 उनको 85 दिख रहे थे वहाँ पे, 85, 86. एंड जरूरत भी नहीं थी उनको, बिकॉज ऑलरेडी गॉट 75. फिर भी And how is it possible, beta, that we get dot 40s in theories? Huh? Saw diye beta, how? But how is it possible that we get dot 40s, beta? Just not possible, no? That is all because of the performance in other papers and everything as such, guys. If you get 35, 36 here, it's like ठीक है बच्चा बेचारा बाकी सब में अच्छा ही गया ना, क्या लुढ़काते इसको बोल के 40 डाल के छोड़ देते. And in spite of that, beta, we have so many issues. But anyways, back to this, beta. हाँ, तू भी मंगाया था तेरी आंसर शीट. अच्छे मार्क्स आए थे, रिस्क नहीं लेना था. प्रणव देखो आए थे कितने, कौन से पेपर में? यस बेटा, टैक्स में हर किसी को देता बेटा, जरूरत है. सीए इंटर लेवल पे, नॉट वन, एवरी स्टूडेंट गेट्स. मेन मार्क्स कितने आए थे? यस बेटा. एनीवेज गाइस, हाँ बच गया तू. लिखो बेटा, क्या लिखा बेटा? रिस्क इज एलिमिनेटेड फ्रॉम दी कैश फ्लो as only certain cash flows are considered, as only certain cash flows are considered, as only certain cash flows are considered, as only certain cash flows are considered. The cash flows are discounted at, the cash flows are discounted at risk-free rate. The cash flows are discounted at risk-free rate. The cash flows are discounted at risk-free rate. Cash flows are discounted at risk-free rate. ठीक है बेटा. How is C factor computed? लिखो बेटा, उसके नीचे लिखना. If expected cash flows, if expected cash flows are 1 crore and 10 lakhs with 0.7 and 0.3 probabilities, average कैसे लिखोगे बेटा? राइट, 1 crore into 0.7, 10 lakhs into 0.3, that will be 73 lakhs. Average beta would be 1 crore into 0.7, guys, 10 lakhs into 0.3, 73 lakhs. जेप्टो करा दो भाई, हमारी जिंदगी बिगड़ जा रही रे. Yes guys, 73 lakhs. Next beta, if the investor has the option, if the continuation, if the investor has the option to eliminate the uncertainty and opt for 50 lakhs cash flow, to eliminate the uncertainty and opt for 50 lakhs cash flow, certainty equivalent factor beta will be 50 lakhs divided by 73 lakhs. 50 lakhs divided by 73 lakhs कितना हो जाएगा बेटा? 0.6849. 0.6849. .6849. समझ में आया नहीं आएगा इस अभी? So instead of giving you certain cash flows, they will give you expected cash flow and they will give you certainty equivalent factor, using which we're supposed to arrive at our certain cash flows. लिखो बेटा नीचे, note. Note guys. Certainty equivalent is considered superior to risk adjusted discounting rate. Certainty equivalent is considered superior to risk adjusted discounting rate. Risk adjusted discounting rate as we can incorporate different levels of risk for each year. As we can incorporate different levels of risk for each year. As we can incorporate different levels of risk for each year. Different levels of risk for each year. ब्रैकेट्स में बेटा डिफरेंट सीई फैक्टर्स, brackets में बेटा different CE factors, as we can incorporate different levels of risk for each year in brackets different CE factors, CE factors, brackets close बेटा. Unlike RADR where the risk is assumed to be constant, unlike RADR where the risk is assumed to be constant, unlike RADR where the risk is assumed to be constant, risk is assumed to be constant. Next. however however huh? Note my continuation. However, it is difficult to it is difficult to however it is difficult to क्या बेटा arrive at the certain cash flow component. It is difficult to arrive at the certain cash flow component. Difficult to arrive at the certain cash flow component. Certain cash flow component. And hence RADR is commonly used. Apna every capital budgeting decision beta you will not see certainty equivalent approach. You will only see RADR. And hence RADR is commonly used. समझ में आ गया guys? Let's start questions. ये कहाँ है रे लहर? She missing class is rare. Question number 12 beta. An enterprise is investing 100 lakhs in a project. फालतू क्वेश्चन है बेटा बट हाँ. The risk free rate of return is 7%. Risk premium expected by the management is 7%. Life of the project is 5 years. Following are the cash flows that are estimated over the life of the project. Year 1 to 5 cash flows are given. You're supposed to calculate NPV based on risk free rate and also based on RADR. So एक बार you will discount all the cash flows at 7%. The other time you will discount all the cash flows at 14%. Over. Compare with the amount of initial investment and get your NPV. हाँ. Obviously रिस्क फ्री में ज्यादा एनपीवी आता बट सिर्फ कैलकुलेट करो बोल रहा है. उसको बोलेंगे ये गलत है ऐसा नहीं कर सकते अपन बोल के. ग्रेस मार्क्स देते हैं इसके. रिस्क फ्री रेट इज 7% बेटा. योर रिस्क एडजस्टेड डिस्काउंटिंग रेट would be 7% plus 7%, but how much is that? 14%. 7 plus 7 beta 14%. Now guys, what are we going to write beta? Present value of cash inflows. पहले risk free rate बोल के हो गया ये. Present value of cash inflows beta. You know the cash flows every year. Discount them at risk free rate. How much is this guys? $244.3689. इन्वेस्टमेंट कितना है 100. एनपीवी 144.3689 lakhs. Check guys. Yes, but same thing, guys, at 14%, guys. Discount the cash flows at 14% and get the NPV better. How much is the present value of cash inflows, guys, at 14%? At RADR as such, better. You'll write PVCI, guys, as 25 divided by 1.14. Prachi ho gaya. 14 whole square, beta. 75 by 1.14 whole cube. 80 by 1.14 whole power 4. 65 by 1.14 whole power 5. Well, 8461. Your initial investment beta is 100 lakhs. Therefore, your NPV beta would be 99.8461 lakhs. Are we all clear about this? Sure, guys? ठीक है फिर नेक्स्ट क्वेश्चन करो. मुंह मत बिगाड़ो गाइस, मेरे लिए नहीं कर रहे हो. देखो हवा आ रही नहीं है, वाली आ रही है. देखो तीनों आ रहे. अरे ये ऑफ कर देना बेटा, ये ऐसे. Yes, beta. Are we all done? Question number 13, guys. Shall we start, beta? प्रणव आ गया बेटा आंसर? कैलकुलेट किया ना? जो स्पीड से तू मार रहा ना. सॉरी बेटा, मैं तेरे से मारा. Question number 13, guys. Now Pranav will help us. Determine the risk adjusted NPV of the following projects, beta. They've given us 3 projects, X, Y, and Z. All the projects have a life of 5 years. They've given us what is the amount of initial investment, 2,10,000, 1,20,000, 1 lakh. They've given us what is the amount of annual cash inflow, 70,000, 42,000, and 30,000. Coefficient of variation is given as 1.2, 0.8, and 0.4. Company selects RADR, risk adjusted rate of discount, on the basis of coefficient of variation. So instead of directly telling you beta what is the rate applicable, सिर्फ बोल रहा है बेटा फर्स्ट प्रोजेक्ट का कोएफिशिएंट ऑफ वेरिएशन कितना है 1.2. So based on 1.2 beta, what is the risk adjusted discounting rate that you should take? 16%. And you already gave us present value annuity factor at that rate, guys. समझ में आ रहा है? Second project has a coefficient of variation of 0.8. 0.8 के लिए you should pick up a discounting rate of 14%. Third project beta has 0.4, 12%. Over. We will have to pick up these discounting rates, guys. Corresponding PVAFs are also given in the question. You just have to multiply, guys, and get the answer. Done. पूरे हो गए 18, 17 तक. You know what are your discounting rates, guys? You know what are your PVAF? Simply multiply the cash flows beta and get the answer. वन पॉइंट टू के लिए बेटा कितना था RADR? 16%. 0.8 के लिए 14%, and this was 12%. Your present value annuity factor, guys, at whatever is your discounting rate for 5 years, guys. 16% के लिए what is your present value annuity factor given, guys? 3.274. दूसरा वाला 3.433, 3.605. You have your annual cash inflow, you have your PVAF, guys, at R%. You just have to multiply and write the present value of cash inflows. Cash flow multiplied by PVAF. ये सब questions बेटा तुम्हारे को already थे in your CA Inter. Values भी same है. 70,000 into 3.274 करना बेटा that, and then deduct the amount of initial investment. Yes, guys. How much is the present value of cash flows? बोल बेटा. 180. Next. 144. 186. 108. What is the amount of initial investment, guys? Initial investment is 2,10,000. Next. 1,20,000 beta, and then 1 lakh. What will be your NPVs, guys? NPV beta is 19,180, 24,186, and 8,150. Which project is best on the basis of NPV beta? Which project will you selection नहीं करो बोला बेटा वो ठीक है. These are the NPVs as such, guys. Everyone got these answers, guys? Question number 14 beta after this, if you're done with this. Krish कौन सा 14th वाला कर रहा है? Next, guys, question number 14. New Projects Limited, guys, is evaluating 3 projects, P1, P2 and P3. Following information is available, guys, in respect of these projects. Cost matlab initial investment beta, that is given as 15 lakhs for P1, 11 lakhs for P2 and 19 lakhs for P3. Inflows are given guys here 1, 2, 3, 4. Project 1 ka inflows are going to remain same every year. Project 2 beta 6 lakhs, 4 lakhs, 5 lakhs and 2 lakhs. Project 3 is 4 lakhs, 6 lakhs, 8 lakhs and 12 lakhs. Risk index is given beta as 1.8, 1.5, 0.6. Risk index beta is similar to beta factor but not exactly beta factor. Risk index here beta will be comparison to the overall risk of a project. Minimum required rate of return of the firm is 15% and applicable tax rate is 40%. Risk free interest rate is 10%. ये जो minimum required rate of return हो गया बेटा of the firm, that is 15%. That will now become the return guys at a risk index of 1. That should be considered as the base. 15% will be considered as the base guys. That means on a normal risk project the firm is expecting a return of 15%, so the risk premium is 5%. 5% one a risk premium because your risk free rate is 10%. So if the risk index is 1.8, how much should be your risk premium? 1.8 multiplied by 5. 9% should be your risk premium. To that you will add 10%. समझ में आ रहा है? Why did they give us tax rate guys? Huh? Why is tax rate given? Here on cash flows are before tax, so you'll deduct tax. Incorrect guys. Tax rate is useless. कहाँ पे दिया बेटा? He only mentioned inflows guys. He never said inflows before taxes. No. Same cheese beta. This question when it came beta in CA final long back when this was forming part, everyone assumed that tax rate is to be adjusted from cash flows, and the question was given for 10 marks. Imagine guys. 0 आते फिर. Because you adjusted taxes as such guys, everything will go for a toss. Grace marks आते यहाँ पे. Yes beta. Taxes are not relevant in any manner. Is that clear? सबसे important बेटा वो लिखो. Tax rate is तो कम adjust कर दी. Same चीज बेटा इंटर में भी पढ़ाया था. नहीं करते assumption. Cash inflows के लिए नहीं करते बेटा. हर एक चीज assumption apply नहीं कर सकते. हाँ किस में करते थे? क्योंकि वहां पे प्रॉफिट बिफोर डेप्रिसिएशन देता था. There's a difference. Yes beta, write down guys. As cash inflows are already given, as cash inflows are already given, as cash inflows are already given, cash inflows are already given, tax rate is irrelevant. As cash inflows are already given, tax rate is irrelevant. Tax rate is irrelevant. Tax rate is irrelevant. Next. The required rate of return of 15%. The required rate of return of 15%. Required rate of return of 15% will be for a normal riskier project. Will be for a normal risk project. Will be for a normal risk project. That is risk index of 1. That is risk index of 1. Risk index of 1. So the risk premium is 5% for a normal risk project. The risk index is 5%. Risk premium beta is 5% for a risk index of 1. For a risk index of 1. Now guys, उसके नीचे ऐसे लिखो बेटा. P1, P2, P3 guys. Risk index is 1.8, 1 and 0.6. So what should be the risk premium guys? Here you will write 1.8 into 5%, 1 into 5%, 0.6 into 5%. So that beta would be 9%, 5% and 3%. What will be your RADR beta? RADR, you will write it as risk free rate plus risk premium. What is your risk free rate, guys? 10%. So here you will write 10 plus 9 beta, that will be 19%. 10 plus 5, guys, that would be 15%, and 10 plus 3 beta would be 13%. This is the computation of RADR, guys. Now you can start off computing risk adjusted and అయిపోయింది మొత్తం. All the 3 projects done. Sai Kiran. Once you do this beta, you can now compute, guys. Project 1 ka beta, you know cash flows, guys. You know what is your RADR. So you can write PVCI, guys, of project 1. 6 lakhs by 1.19. Like this you will do for all the 4 projects beta now. Is that clear? 3 projects. Are we all done, guys? First project का कितना है बेटा PVCI? 15,83,151. What is the investment, beta? So the NPV of this project as such, guys, is 83,151. Project 2, guys, PVCI discounting rate 15% है ना? So your PVCI as such beta will be equal to how much, guys? 305. Investment is 11 lakhs, guys. So your NPV beta is 1 lakh 67,305 rupees. Project 3, guys, now. निकेत को गुस्सा आ रहा है क्लास में. अरे अरे सॉरी क्या करे बॉटल थोड़ा. How much is this beta? एक second. 21 lakhs 293. Your investment as such, guys, in the last project is 19 lakhs. Therefore NPV beta is 2 lakhs 14,293. Finish off all the computations, guys, then we'll write the conclusion. Least? हाँ. ऑलरेडी रिस्क इनकॉर्पोरेट कर दिया ना, तो फिर सिर्फ इन पे भी कंप्यूट करना, वापस रिस्क नहीं लाना बीच में. किसी प्रोजेक्ट का अगर एनपीवी ज़्यादा होता but risk is also high, you will still select that because risk is already incorporated. Please finish off this beta. सबका हो गया guys computation? Is anyone still doing it? Pranav done? Project 3 कर रहा है. साक्षी done? जीत गए ना वो लोग. Yes beta, we all done guys. Write the conclusion beta. क्या रहेगा guys? Based on NPV beta, project 3 should be selected. Based on NPV, project 3 should be selected. Based on NPV, project 3 should be selected. Based on NPV, project 3 should be selected. Profitability index should not be considered. ये तुम्हारे अंडरस्टैंडिंग के लिए, ये एग्जाम में नहीं लिखना है क्योंकि तुम्हारे बाद में डाउट आएगा वापस. Profitability index should not be considered. Profitability index should not be considered. Should not be considered unless profitability index should not be considered better unless capital is a limiting factor. Unless capital is a limiting factor. Brackets में बेटा capital rationing. Capital rationing. Capital rationing. Abhi clear guys? Question number 15 beta 1-5. Consider the below mentioned table for the risk premium and the coefficient of variation. If the coefficient of variation is 0, there's a 0 risk premium. If it ranges between 0 to 0.25, risk premium will be 2%. If it is between 0.25 to 0.5, it is 3%. 0.5 to 0.75, it is 4%. 0.75 to 1, it is 6%. A company is evaluating 2 projects with an initial investment of rupees 1,50,000 for each project, with cash inflows from them occurring at the end of 5th year, which depends on possible scenarios prevailing during the investment period. These are the cash flows directly arising, guys, at the end of fifth year. Please underline that, at the end of fifth year. It is not for a period of 5 years. It is directly, guys, at the end of fifth year. ठीक है? The details of same are as follows. They've given us superb better 5 conditions project cash flows beta X and Y. If the ongoing government yield is 6%, identify which project is to be undertaken. Your job beta is to first compute coefficient of variation. How will you do that? Standard deviation divided by expected cash flow. You cannot compute standard deviation of NPV, guys. You can only क्योंकि NPV तो compute ही करना है ना अपन को after computing risk adjusted discounting rate. So here you're supposed to arrive at expected cash flow and standard deviation of each project, compute coefficient of variation, then you will know what is the risk premium to be selected. Once you know risk premium, use that expected cash flow directly. पूरे 5 cash flows वापस नहीं लेना है बेटा. You'll directly take expected cash flow discount for the 5th year, compare with the amount of initial investment. That will give us the NPV. Are we clear, guys? So first task beta, what are we supposed to do? Compute expected cash flow and coefficient of variation. Start, guys. First thing that you're supposed to do beta is arrive at coefficient of variation. This is what you will do beta. Yes guys, सबका हो गया क्या बेटा? What is the expected cash flow beta for the first year? 1 lakh 90, 2 lakh, 2 lakh 24,000. Variance कितना आया बेटा? Did you take thousands या पूरा लिखे? 5 lakhs में करे? Perfect. So 5 minus 2.24 whole square into 0.25 guys. This is in lakhs beta, lakh square. ठीक है? This is 3 minus 2.24 whole square guys into 0.3. 1.5 minus 2.24 whole square into 0.15. 0.5 minus 2.24 whole square into 0.2. 0.1 minus 2.24 whole square guys into 0.15. How much will this total be guys? 3.0714 lakh square. Standard deviation is root over 3.0714 lakh square. 1.75 ఇంకోటి చెప్పు 75254 lakhs, so that is 1,75,000 beta 254 rupees. All right, అదే ఎందుకంటే I'm anyways writing expected cash flow full amount no beta, so that is why I'm writing here. 2,24,000 is your expected cash flow beta, and you will get standard deviation as 1,75,254 rupees. Do you get this? That is 3.0714 lakh square beta. Based on that, we are getting this 175,254. We are done guys. शुभम हो गया गाइस. प्रोजेक्ट वाई का बोलो बेटा कितना है? पूरा हो गया प्रोजेक्ट वाई भी? एनपीवी नेगेटिव हो सकता है ना बेटा? 2,24,000 is at the end of 5th year, no, and initial investment is 1,50,000, so obviously ये लास्ट वाला 5,000 into 0.1 500 है ना यार? टू मच है यार ये. 1,90,000, 2,40,000, 2,55,000, 500 गाइस. वेरिएंस में बेटा पूरे पॉइंट्स लो ताकि स्टैंडर्ड डिविएशन में अप्रोक्सीमेशन एरर ना आए. ठीक है? You will write 4 minus 2.555 whole square. This is in lakh square guys. Into 0.3. 3.5 minus 2.555 whole square guys into 0.2. 2.5 minus 2.555 whole square into 0.2. 0.75 minus 2.555 whole square into 0.2. This is 0.05 beta minus 2.555 whole square into 0.1. How much will this be, guys? Variance 2.08725 lakh square. So standard deviation beta is root over this value 1.44386. So that is 1,44,386 rupees. Correct, guys? We got standard deviation, we got expected cash flow of both the projects. Beta अभी क्या compute करना है? Coefficient of variation, so that you know what is the risk premium, and then discount the cash flow. You're not going to receive this cash flow every year. You're going to receive this cash flow only once. All of you, please compute standard deviation of second project. Are we all clear, beta? क्या हुआ? Now guys, project X and project Y, beta. Project X and project Y. Can you tell me what is your standard deviation for project X, guys? 1,75,254 rupees. This is 1,44,386 rupees. What is your expected cash flow, beta? 2,24,000 and 2,55,500. How much will be your coefficient of variation, guys? Coefficient of variation. एक सेकंड. हाँ, 0.7824. 144,386 beta divided by 2,55,500. 56 double. This is coefficient of variation, guys. What is your risk premium? गलत है. अरे ठीक है यार. Risk premium beta कितना है? How much is risk premium, guys? For this it will be 6%. For this will be 4%. What will be your RADR, guys, now? Risk free rate, guys, plus risk premium. Risk free rate कितना है बेटा? So 6 plus 6 beta, it will be 12% for the first project, and 6% plus 4%, it will be 10% for the second project. मैं लाख स्क्वायर लिया इसके पहले, सो माय आंसर इज इन लैक्स. वो फाइनल आंसर है, उसका वापस रूट नहीं आता बेटा. पूरा अमाउंट अगर तू ले रहा 4 लाख माइनस 2,55,500 कर रहा होल स्क्वायर इंटू 0.3, कैलकुलेटर पे एरर आता ही नहीं वैल्यू. एक बार कैलकुलेटर दो रे मेरे को. तो पूरा लिया, अरे कैलकुलेटर दे बे एक बार. हाँ बैठ जा फिर. 1000 स्क्वायर आता तेरा आंसर, तो वापस रूट ऑफ 1000 नहीं लेता तू. तो इफ यू टेक 1000 स्क्वायर एज सच बेटा, यू विल राइट 400 माइनस 255.5. करेक्ट या 2555 कर दिया. तो 400 माइनस 255.5 किया ना. अगर थाउजेंड्स में ले रहा तो देखो एक्सपेक्टेड कैश फ्लो 255.5 आया, तो वो कैश फ्लो कितना आएगा 400 माइनस 255.5 होल स्क्वायर इंटू 0.3. अभी दे रहे वापस कैलकुलेटर, सॉरी. स्टैंडर्ड डिविएशन को 1000 से मल्टीप्लाई करेगा. आफ्टर यू कंप्यूट स्टैंडर्ड डिविएशन देन यू विल मल्टीप्लाई इनटू 1000, because there are variances in 1000 square, takes root of that directly. After you compute your standard deviation is in thousands, that you will multiply by 1000 over. Understood? Catch Aditya. Yes beta. Now guys, what will be the present value of cash inflow guys? Remember we are receiving only one cash flow beta, so 2,24,000 divided by 1.12 whole power 5, 2,55,500 divided by 1.1 whole power 5, 127,104. दूसरा वाला 1,646. What is the amount of investment guys in both the projects? 1,50,000. So the NPV of first project is negative 22,896. This is positive 8646. Which project will you select? Undoubtedly Y. You should leave X. Correct Varun? Please check. आया देखो आंसर अभी. Yes बेटा. Yes guys. समझ में आ गया ये. क्वेश्चन नंबर 16 कर लो बेटा, डेड इजी है. यू जस्ट हैव टू मल्टीप्लाई एक्सपेक्टेड कैश फ्लोज विद व्हाट? सर्टेनिटी इक्विवेलेंट फैक्टर्स एंड देन डिस्काउंटेड रिस्क फ्री रेट. तेरा हो गया होगा ना दोनों 16 17? तेरा भी हो गया 16 17? All the chapters that are coming up, guys, are very important. They're smaller. They're category A chapters. जैसे म्यूचुअल फंड से बेटा जैसे बेयर मिनिमम मार्क्स ऑफ 8 मार्क्स, कभी कभी 16 मार्क के लिए आता है. इंटरेस्ट रेट रिस्क मैनेजमेंट डेफिनेटली 8 मार्क्स. इंटरनेशनल फाइनेंशियल मैनेजमेंट डेफिनेटली 8 मार्क्स. सबसे बड़ा एडवांटेज लिमिटेड नंबर ऑफ क्वेश्चंस इन ऑल द चैप्टर्स. All right, guys, are we all done? Question number 16 is based on certainty equivalent beta. They've given us expected cash flows. They've given us certainty equivalent factor. All you have to do beta is multiply your expected cash flows with certainty equivalent factors and you will get what beta? Certain cash flows. Once you get certain cash flows as such, guys, you will discount them at risk-free rate. 10 lakhs multiplied by 0.9, 9 lakhs. 15 lakhs multiplied by 0.85, guys. 20 lakhs multiplied by 0.82 and this. इसके बाद में you're supposed to discount the cash flows at risk-free rate and compare it with the amount of initial investment. That's it. That will give us the NPV under certainty equivalent technique. हो गया तेरा भी वरण? I just told you guys how to compute certainty equivalent factor beta. We have our expected cash flows 10 lakhs, 15 lakhs, 20 lakhs and 25 lakhs. Your certain cash flows, guys, would be 9 lakhs, 15 lakhs into 0.95 beta, 12 lakhs, 75,000, 16 lakhs, 40,000, 25 lakhs, 0.78, 19 lakhs, 50,000. Your risk-free rate beta is how much? 5%. Because your risk-free rate is 5%, you're going to discount 5% here, na? Huh. You're going to discount all the cash flows at 5%, guys, and write NPV. Present value of cash inflows beta is 9 lakhs by 1.05, 12 lakhs 75,000 by 1.05 whole square, 16 lakhs 40 divided by 1.05 whole cube, 19 lakhs 50,000 by 1.05 whole power 4. How much will this be, guys? 50 lakhs. 50.3457. 50 lakhs 34,570. Your initial investment beta is 45 lakhs. Therefore, NPV under certainty equivalent approach beta would be 5 lakhs 34,570. 5 lakhs 34,750, guys. 570. Please finish off 17th question also, guys. Yes, beta. हो गया guys, second project, second question B. Question number 17 guys, can you tell me what are the answers beta? Certain cash flows कितने बेटा project M के? Certain cash flows guys. Total बोल रहा 3,60,000 divided by 1.06. 3 लाख. हाँ ठीक है, मैं ऐसे लिख रहा हूँ बेटा, तुम लोग फैक्टर से ही मल्टीप्लाई करके बोलना, ठीक है? प्रॉब्लम है? How much is the present value of cash inflows beta? 980. Your investment guys is 8,50,000. NPV is 10,980. Present value factors are given in the question guys. You're supposed to use those present value factors. Did you all get the same answer? साइग्रन कुछ गलत जा रहा तो बोल बेटा. Project N guys, PVCI beta will be 4,05,000 divided by 1.06. 4,50,000 मतलब 3,60,000 divided by 1.06 whole square and 3,50,000 by 1.06 whole cube. How much does this be beta? अरे धीरू, तेरा इंट्रोडक्शन दो क्लास में. तेरा इंट्रोडक्शन दो क्लास में. तेरे कांड के बारे में बोलूं. देखा बच्चा कितने कांड करा जिंदगी में, सोचो. 9 लाख 315. Investment guys is 8,25,000. How much is NPV beta? 1,71,000. So one NPV is 10,980. The other NPV is 1,71,315 guys. Which project will you select? Undoubtedly N. Did you all get these answers? तुम लोग नेक्स्ट क्वेश्चन तो नहीं कर रहे हो ना बेटा? हो गया ना यहाँ पे? प्रोजेक्ट एन शुड बी सिलेक्टेड. सेकंड बिट का आंसर क्या लिखोगे बेटा? इफ यू वेर टू यूज RADR मेथड, व्हिच प्रोजेक्ट वुड बी एनालाइज्ड विद अ हायर रेट? इज इट प्रोजेक्ट एम और प्रोजेक्ट एन? व्हाई एम? Certainty factors beta for project M are lower. Lower certainty equivalent factors मतलब क्या guys? Higher element of risk. So that is why if you were to use RADR method, project M would be discounted with a higher rate. समझ में आ रहा है ना ये? Write down guys. Write the conclusion guys. Second bit beta. Project M has lower certainty equivalent factors. Project M has lower certainty equivalent factors. Project M has lower certainty equivalent factors, which implies a lower proportion of the total cash flow is certain, which implies a lower proportion of the total cash flows is certain. Lower proportion of the total cash flows is certain, and hence there is a higher risk element. And hence there is a higher risk element. And hence there is a higher risk element. Project M should be discounted with Project M should be discounted with a higher rate under RADR technique. Project M should be discounted with a higher rate under RADR technique. Are we clear guys? Moving on to the next topic guys, other techniques. The very first thing that we have is sensitivity analysis. We are done with conventional techniques, we are done with statistical techniques guys. The next thing that we are doing better is sensitivity analysis. What do you understand by sensitivity analysis better? Your entire NPV computation guys is based on estimates of multiple variables, all of which can change on a later date. You try to estimate the cash flow, you try to estimate sales. सुन लो ना बेटा एक बार, heading बाद में लिखना बेटा. अरे बाद. Your entire NPV computation, guys, will be based on estimates of certain things. You will have to estimate, guys, sales volume. You will have to estimate selling price, variable cost, fixed cost, life of the project, cost of capital as such, better, among all other things. Under sensitivity analysis as such, guys, what we perform better is a what if analysis. A what if analysis better is what if a particular factor changes. How is that going to impact the NPV of the project? So I will keep all other factors constant. I will change only one factor. Objective is to know the adverse impact beta that it will have on the NPV of the project. Sound में आ रहा है बेटा? So when we say adverse, जैसे बेटा US में मैं पढ़ रहा था, that because of an increase in interest rate as such, guys, the amount of unrealized losses that they had to book in the balance sheets of banking sector as such better because of fair value measurement was to the extent of $250 billion. Okay, that was the amount of unrealized losses that they had to book, and another 1% increase as such, guys, might cause another say $100 billion. That is in turn going to affect their risk adjusted discounting rate. Luckily for us, beta banking sector को अभी भी Ind AS apply नहीं हुआ है. That is the reason why we did not apply Ind AS yet, because the minute we apply Ind AS, heavy provisionings will come into books beta. Fair value accounting will come and provisioning will increase. Expected credit losses approach जाना पड़ता है. Compulsory we will have to provide for losses. तुम लोग जो ECL जिसका भी हो चुका है बेटा Ind AS, you will know the amount of provisioning norms drastically increases, and that जैसे one study conducted beta said that even private sector banks which has a capital adequacy ratio of 17 to 18%, their capital adequacy ratio as such beta would come down to levels of 13%, which is the minimum threshold as required अभी RBI के norm से बेटा. हाँ because of the losses as such, guys, your capital adequacy ratio, because your capital base will reduce beta, reserves will reduce, and that will bring down your capital adequacy ratio, which in turn is a very riskier factor as such beta. Just telling you as to what will be the impact. This is all sensitivity analysis, guys. They're trying to perform this only, that in case these unrealized losses are booked in the banking sector today as such beta, what will happen. Okay, so back guys, you should know, guys, what are the stress factors. जैसे every Indian beta is now talking about retail loans in the banking sector. ये जो small ticket loans, इतने जो small ticket loans का definition is less than 50,000. Less than 50,000 में बेटा the stress ratio has gone beyond 10%. Approximately 10% मतलब क्या, guys? More than 10% as such, guys, delinquencies have been outstanding for more than 30 days, which is not a favorable factor. And the amount of loans that they're giving, guys, under this is drastically increasing. Just say one bank has given loans to the extent of 30,000 crore rupees. They're tying up with all of these beta fintech companies as such beta and start giving these loans. आजकल बेटा everyone, guys, even to make office payments as such beta are using these facilities. मालूम है ना बेटा? Rent भी pay करना है ना residential वालों को. They are availing this credit facility, they pay rent. Forget paying rent out of salary, guys. Now we first avail credit, pay rents, then next month when we get salary as such beta, we use that salary to repay our credit. Exactly how it works beta in US market. Consumer credit is drastically increasing as such beta, which is not favorable as such. See, it is good for growth because the spending increases as such, guys, but then for the financial sector as such beta, it is not that great. Agar stress factor increases drastically. I have seen as such, guys, a couple of CAs also as such beta initially, matlab in their initial phases when they come into practice as such beta, they use these credit facilities as such, guys, to repay all of their expenses. And the amount of interest that they charge beta is high. It goes up to 2%, and someone who doesn't have a good credit score, it goes up to 45-48% per annum also. मैं बोला था ना, there's one NBFC based out of Hyderabad as such beta that has a total asset under management of 300 crores now. They are raising more funds. Their average interest yield as such beta is 43 to 44%. This is the interest that they charge on loans that they give, personal loans. 43 to 44% beta is no joke. Once someone gets trapped in an interest cycle of 4 to 5% as such beta, it is way too difficult to come out of it. Because you basically as such beta are repaying 2x every 12 months if you take compounding into consideration. Not something that is sustainable as such beta in the long run. Forget long run beta, even in the medium term. But guys, back to this beta. So sensitivity analysis mein our objective as such, guys, to change one variable and see what will be the impact of that, guys, on the overall NPV. there are two approaches of performing sensitivity analysis, guys. याद रखना guys, the biggest drawback of sensitivity analysis is this only, that we can only change one factor at a time. In reality, one factor will not change at once as such, better. There can be multiple factors as such, guys, changing at once. Is there a possibility that the interest rates are increasing and consumer demand is decreasing? हाँ या ना? The sales volume will automatically come down as such, beta. Interest rate बढ़ गए वहाँ पे, inflation has increased, because of which your input cost has increased, but the output selling price cannot be increased because already the demand is lower. If the demand is way too high, it will be easier to pass on, beta, your input cost to the end consumer by increasing your selling price. But if the demand itself is lower, there will be a time lag between you passing on your input cost, beta, to the end customer. Is that clear, guys? So that is the biggest drawback of sensitivity analysis. But coming back, better, two approaches. First approach, you will take every factor, change it by a constant percentage. I reduce my selling price by 10%, I increase my variable cost by 10%, I reduce my sales volume by 10%, and then see, guys, because of this, what is the impact on my NPV? This is changing every variable by a constant percentage. The other one, beta, is recompute, beta, backward computation. You will take NPV as 0 and see, for the NPV to be 0, guys, what should be the percentage change in a variable? मतलब to what extent should your selling price reduce so that the NPV will come down to 0? To what extent, beta, should your sales volume decrease so that NPV should come down to 0? ऐसे हर एक फैक्टर के लिए रिवर्स कैलकुलेशन करेंगे by equating your NPV to 0. What we perform, beta, in reality is the first one. You will take a constant change in every variable as such, beta, and then see what is the impact of that as such, guys, on your NPV. FR में, guys, fair value measurement में you will have to give investment property के लिए भी, बेटा, there's a disclosure. You will have to show for every 1% or 0.5% change in interest rate, what will be the impact on your valuation? How will the fair value change? That is nothing but sensitivity analysis. समझ में आ रहा है, guys? Is this point clear? लिखो बेटा. इसको क्या बोलते हैं? दूसरा नाम क्या है? What if analysis. थोड़ा ध्यान दो बेटा जब मैं पढ़ा रहा हूँ. Sensitivity analysis, better write down. Sensitivity analysis. Every capital budgeting decision is based on an estimate of uncertain variables, we will have to make an estimate of sales volume. Selling price, selling price, variable cost, fixed cost, life of the project, cost of capital, initial investment, any of the full stop, beta. Any of these variables can change on a later date. Any of the variables, beta, can change on a later date. can change on a later date. Any of the variables can change on a later date. Sensitivity analysis measures. Sensitivity analysis measures. Sensitivity analysis measures the impact of change in one variable, measures the impact of change in one variable on the NPV of the project, on the NPV of the project, on the NPV of the project. It is also termed as what if analysis. It is also termed as what if analysis. Also termed as what if analysis. Two approaches, guys. क्या बेटा? Approach one, बेटा. Change each variable by a constant percentage and measure the adverse impact on NPV. अपन favorable compute नहीं कर रहे बेटा, we are only measuring adverse impact. Measure the adverse impact on NPV. Approach 2 क्या बेटा? Compute the percentage change in each variable required. Compute the percentage change in each variable required to reduce the NPV to 0. To reduce the NPV to 0. Question में बोलेगा बेटा वो क्या अप्रोच करना है बोल के. To reduce the NPV to 0. What is the disadvantage of this analysis? Right on. Disadvantage. ये नहीं हुआ. Write on this, guys. Disadvantage. It considers change in only one variable. Saikiran. I pen pani. It considers change in only one variable. It considers change in only one variable. In reality, multiple variables can change at once. In reality, multiple variables can change at once. Multiple variables can change at once. The other disadvantage, beta, is we do not consider the probability of such change. We only see that there is a change, but not every variable will have an equal chance of change. Hi, na guys. The probability of changes is ignored. The probability of changes is ignored. Probability of changes is ignored. समझ में आ गया? Very good, guys. Question number 18, beta. 18 question. X Limited is considering its new product with the following details. There's an initial capital cost of 400 crores. Annual unit sales is 5 crores. Selling price per unit is 100 rupees. Variable cost per unit is 50. Fixed cost per year 50 crores. Discount rate 6%. Calculate the NPV of the project. Beta add life 3 years बोल के. सब लोग ऐड करो बेटा, लाइफ 3 years. Calculate the NPV of the project and also arrive at the impact on the project's NPV for a 2.5% adverse variance in each variable. Approach 1. He's telling us that you're supposed to change every variable by 2.5% and then see beta what is going to be your NPV. So guys, यहाँ पे I will have to change my initial capital cost, I will have to change my sales volume, selling price, variable cost, fixed cost, discount rate. 6 variables change करना है बेटा अपन को. तो फर्स्ट लाइफ नहीं बेटा, लाइफ आई कैन नॉट डिक्रीज बाय 2.5% एंड कंप्यूट एनपीवी बेटा. फॉर 2.5% दे विल नॉट आस्क. For 100% change they will ask what is to be done, I will tell you better, but for 2.5% they will not ask all of this. It will be 3 years minus 2.5% बोल के थोड़ा मुश्किल होता करना. समझ में आ रहा है ना? So guys, what will you do better here? First compute the existing NPV, then I will have to compute 6 NPVs. Recompute 6 NPVs by changing only one variable at once as better. समझ में आ रहा है? Can we all compute the existing NPV better first? There are no taxes, no depreciation, nothing better. All of that details will be ignored. Your cash flow per annum better would be considered to be 200 crores better. Present value annuity factor कितना है बेटा? 6%, 4 years, 3 years. 2.6, 534.6024. Therefore, your NPV beta, what is your investment, guys? Investment beta is 400 crores. So, what will be your NPV, guys? 130. This is how you'll present beta. This is computation of existing NPV, guys. Nowhere related to this chapter. Normal. You just have to take your cash flows and arrive at your NPV. We have sales volume, we have selling price per unit, we have variable cost per unit, contribution, fixed cost, using which we're arriving at our cash flow. बता रहे हो या फिर एक एक फैक्टर ले रहे हो? वी ऑल गेट 134. एक ही टेबल में भी सब बता सकते हो बेटा, बट क्या बोल रहा, बेटर है वो, कंजेस्टेड हुआ था. ठीक है गैस, योर विश बेटा. सो फर्स्ट फैक्टर गैस, इफ investment increases by 2.5% बेटा, what will be your revised investment guys? पहले कितना था 400 crores plus 2.5%, it will become 410 crores. If investment is increasing by 2.5% beta, that will become 410 crores. Will your present value of cash inflows change guys? No, it will remain at 534.6024 crores. So what will be the NPV beta? 124.6024 crores. परसेंटेज चेंज इन एनपीवी यहीं पे लिख रहे हो या लास्ट में करेंगे एक ही साथ? लास्ट में लिखेंगे ना यार, इजी हुआ था. नहीं मैं नहीं लिख रहा हूँ यहाँ पे, क्योंकि एनीवेज हैव टू राइट ऑल द वैल्यूज एंड देन राइट नो व्हाट इज हैविंग द मैक्सिमम इंपैक्ट बोल के. बेटा कॉस्ट अगर बढ़ रहा है ना तो एडवर्स इफेक्ट है, खर्चा कम हो रहे तो फेवरेबल है, एडवर्स नहीं है. एडवर्स इज कॉस्ट शुड इंक्रीज, रेवेन्यू शुड डिक्रीज. समझ में आ रहा ना? When you say adverse beta, it should be resulting in a loss. When will it result in a loss? When you pay lesser expenditure or when you pay higher? When you pay more. So if cost of the project is increasing, then it is adverse to the organization. Second factor beta is unit sales. Sales को कम करोगे या ज्यादा करोगे? Yeah, because it is revenue guys. Volume beta. Volume to be reduced by 2.5% guys. So what will be your sales volume beta now? 5 crore units minus 2.5%. 4.875 crore units. Can I write cash flow like this beta? 4.875 crores into 50 rupees per unit. ये अपना contribution है because that is not changing. Minus 50 crores fixed cost. चलेगा ना? दौड़ेगा सर. How much is this cash flow? 193 point. Present value of cash inflows beta would be 193.75 crores into PVAF at 6% for 5 years. 3 years. 896 crores. You already know that your investment beta is 400 crores. Therefore NPV is coming down to 117.896 crores. So if your sales volume is adversely getting impacted by 2.5% beta, your NPV will become 117.896 crores. Yes guys. Third factor beta is selling price per unit. You will reduce it by 2.5% and that will become 97.5. Third case is where selling price per unit beta reduces by 2.5%. So your revised selling price beta will be 100 rupees minus 2.5%, 97.5. My cash flow per annum beta will be equal to selling price per unit minus variable cost per unit into number of units minus fixed costs. Correct beta? 97.5 minus 50 rupees into 5 crore units minus 50 crores. What is your cash flow per annum? 187.5 crores. Present value of cash inflows beta would be कितना बेटा 19 NPV beta will be equal to 501.19 crores minus 400 crores 101.19 crores. ऐसे और 3 cases करना है बेटा. You will have to change your variable cost per unit, you will have to change your fixed cost, you will have to change your discounting rate. Yes beta, did you all get the answers? कितना आया? Fourth bit guys. क्या कम करना है बेटा? Variable cost per unit you have to increase by 2.5%. So you will take revised variable cost per unit as how much beta? 50 plus 2.5%, 51.25. You already know your selling price per unit beta is how much? 100. अच्छा ये क्यों लिख रहा हूँ यार, डायरेक्टली लिखता हूँ ना. कैश फ्लो कितना हो जाएगा बेटा? 100 rupees minus 51.25 multiplied by 5 crore units minus a fixed cost of 50 crores. 193.75 crores. Here you will get PVCI as 517.896. Therefore NPV beta will be 117.896. Initial investment is constant at 400 crores. Did you all get this also? Next beta क्या है? Fixed cost increasing by 2.5%. So your fixed cost beta will become 50 crores plus 2.5%, 51.25 crores. Your cash flow per annum beta, everything constant guys, 100 rupees, 50 rupees, 5 crore units, only the fixed cost element is changing. So it will become 198.75 crores. PVCI beta will become 198.75 crores multiplied by PVAF at 6% for 3 years. कितना है बेटा ये? 524.104. Therefore your NPV beta, because your initial investment is constant, will be 124.104 crores. Everyone got this? क्या वो अलग आंसर आया? टू NPV. अरे 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 131.261 crores. What Varun? ऐसे थोड़ी होता है यार. Are you all done guys? Last वाला भी हो गया बेटा. 6 factor. Your discount rate as such beta should increase by 2.5%. ये important है बेटा, मतलब students end up writing 8.5%. It is not 8.5% guys. Revised discount rate beta should be 6% plus what beta? 2.5% of 6%, and that will become 6.15%. Revised discount rate beta will be equal to 6% plus 2.5% of 6%, 6.15%. एक सेकंड बेटा. हाँ बोल. नहीं लिख सकते, रिकम्प्यूट करना पड़ता. What is the present value of cash inflows beta? 200 crores multiplied by PVAF at 6.15% beta for how many years? 3 years. कितना है बेटा ये? 533.122 crores beta. Your NPV will be 133.122 crores. Yes or no guys? हो गया बेटा. प्राची कंक्लूजन लिख ली. परसेंटेज चेंज इन एनपीवी कंप्यूट करी, करती अभी. पैक कर रही बेटा तो. Yes, beta. Did you all get this 133.122 crores? You are supposed to compute percentage change in NPV guys at every stage. Compute कर लिए. All right, I'll give that conclusion tomorrow, beta. Chalo, no homework, guys. Even I have another class. So that's it for the day, beta. I'll see you guys tomorrow. Online students, that's it for the day, beta. See you guys tomorrow.